I want to ask you something, and I want you to answer it honestly. When is the last time your CPA called you? Like, not for documents, not to tell you what you owed, but to sit down and actually talk about your business, to look at where you are right now, mid year, and have a real conversation about what you can still do before December closes the window. For a lot of business owners, the honest answer is never, or maybe once, or maybe there was a conversation like that early on before you started working together, but it hasn't really happened since. And here's what I want you to hear. That's not necessarily your CPA doing something, air quote, wrong. Most CPAs are doing exactly what they were hired to do. Prepare an accurate tax return. File that on time. And that is a really important job. But that's not what we do here at Kickstart Accounting Group and KSA Tax Partners. Welcome to CEO Numbers Network. I'm Danielle Hayden, CEO of Kickstart Accounting Group. Today, we are kicking off our 3-part tax check-in series. And I want to start with the conversation that I think every business owner deserves to be having, and most are not. This is your call your CPA should be having with you. Let me draw a line that I think will reframe a lot of things for you. Tax filing is a backward-looking task. It's the process of documenting what already happened in your business, your income, your expenses, your structure, and reporting it accurately to the IRS. It is compliance work, and it is important. And it is what most tax professionals are primarily trained and compensated to do. And so our tax team uses the backward-looking financial statements that our bookkeeping team has put together to look at what's happened in your business. Tax planning is forward-looking. It's the process of looking at where your business is right now, projecting where it's headed, and making decisions that change your tax outcome before the year is over. And this requires a completely different conversation. Here's the problem with only having the filing conversation. By the time you're sitting across from your accountant in April looking at your return, almost every decision that affected your number, it's already been made. The structure you were in all year, the retirement contributions you did or did not make, the benefits that were or were not set up correctly, the estimated payments that you did or did not keep up with because of your growth, all that, April, it's too late to change any of it. This is why we do the annual tax check-in in the fall of every year. So what is this conversation that we have every fall? What does it look like? Because I think when most business owners hear tax check-in, they picture a quick call that someone glances at your numbers and says, good to go. And that's not what we're talking about here. A real check-in is a structured review of the decisions that are still available to you before December 31st. During our check-ins that we have here at KSA Tax Partners, we're looking at the business from the inside out, not just your tax picture. Here's what we look at in the tax snapshot with our KSA Tax Partners clients. So every single one of our KSA Tax Partners clients, when they book this call, receives a tax snapshot. And we look at a few things here. First is your business structure. Are you the right entity for your business right now? And this isn't a one-time decision. This is a decision that you make year over year over year. The second is benefit setup. Are your benefits structured correctly for your entity type? Your health insurance premiums running through payroll the right way? Are your HSA contributions at the right level? Dependent care, FSAs in place? The errors here cost real money. Third is retirement contributions. Are you contributing at a level that makes sense for your income and your goals? The 2026 contribution limits, they have moved. Most business owners are leaving significant tax savings on the table here. Now, we cannot decide what you're going to invest in and when and how much money. However, we will give you the options and the tax saving benefits that are available for those retirement contributions. Next is your tax projection. What are you actually on track to owe this year? Not just last year's number, but on track to owe this year. This year's number is based on where your business actually is right now. And that projection is what helps you make real decisions for the rest of this year. We do give every single one of our bookkeeping clients their estimated tax reserve at the end of each month. However, this is your tax projection so that you know that you are making the right amount of estimated tax payments. Which brings us to the fifth area, estimated tax payments. Are your quarterly payments keeping pace with your income? If your business has grown And for a lot of you, it has. We love celebrating with you. Your payments might be behind. There is an underpayment penalty. It is real and it is avoidable. Catching it in the fall is the difference between fixing it and then just absorbing those penalty payments. The sixth area is deductions that belong to you. Your home office deduction, accountable plan reimbursements, contractor documentation, making sure that legitimate expenses that you are already incurring are being captured correctly. We did a full episode on specific deductions most business owners miss, so go back and take a listen to that one if you have not. I'll link it in the show notes. That is the check-in, those 6 areas. I want to share a story, and I'll keep the details general to protect the client, but the situation is one that I've seen play out in different versions more time than I can count. A business owner came to us mid-year. They had a CPA that they had been working with for several years. They trusted that relationship, and honestly, their CPA was doing good work. The returns were accurate and they were filed on time. When we sat down and did the annual review, we found 3 things that the filing relationship had not surfaced. Their business had grown to a point where the S Corp election would have saved them a significant amount of money on self-employment tax. Nobody had had that conversation. They were still operating as an LLC, which made sense for them 3 years ago. That was now working against them. Their estimated tax payments were based on last year's income, which was significantly lower. Their business had a very strong first half. They were heading towards a larger than expected tax bill. They had not made a single retirement contribution that year. And it's honestly just because they felt like they couldn't afford it. And no one had prompted the conversation. So it just hadn't happened. And all of those things are fixable when there is still time. Not one of them is fixable in April, but there's all still fixable here in the fall. And that is the mid-year check-in. That is what this is for. Here's the frame I come back to constantly, what I call the boardroom accountability standard. In every boardroom I've ever sat in, every financial conversation comes down to 3 questions. What happened? Why did it happen? And what are you, the CEO, going to do about it? Most business owners are only ever asked the first question, and only in April, after it's too late to do anything about the answer. This annual check-in adds the second and third questions back in while there's still time to act on them. You look at what's happened so far this year. You understand why the numbers look the way they do. And you make decisions for the second half of the year based on that information. It's not guesses, it's not last year's assumptions, but based on what's actually true about your business right now. This is leadership, and it's what you deserve to have in your corner. So here's what I want you to do after you finish this episode. Go to kickstartaccountinginc.com/checklist to download our mid-year tax check-in checklist. Use this as a CEO to make strong, confident decisions for you and your family. Come back next week for episode 2 of our tax series, where we will go deep on business structure, the LLC versus S Corp question, and how to know if your current structure is costing you money and what the process of making that change actually looks like. That one is going to be valuable for a lot of you. I will see you then.